Welcome back. We are moving on to our next session, investing in digital assets via SMAs. I'm glad to bring onto the program Dan Eyre. He's the CEO of Blockchange, a very well-known organization in the digital asset space. Blockchange was the first digital asset TAMP for financial advisors and managers. Dan built the company from the ground up, along with his Penn State roommate and co-founder, Dan Rothrock. Dan, a lot of advisors who are watching this use mutual funds and ETFs. So remind us, do a little quick background on SMAs. Remind us of how SMAs are different from mutual funds and ETFs.
Yeah, well, great to be here, Rick. Thanks for having me. So, when you think about SMAs, they're really focused on the ownership of the underlying assets and the active management of those assets. So unlike a mutual fund or ETF that provides, something like speculative price exposure to the underlying asset, or maybe is kind of an index of multiple different assets, SMAs enable the end client to own the digital assets themselves. And usually that's in an account that they own that's not commingled like a private fund or anything like that. And that in turn enables a whole host of other additional benefits that normally would be unachievable through other investment vehicles.
And so you can have the ability to customize dramatically. You're not buying, or I guess another way to look at it, it's an ETF, but you're the only person who owns it. Sure.
Yeah. I mean, to expand on that a little bit, a few examples of the benefits. You named one of them, which is customization. In our example, because we're a software platform that enables advisors and asset managers to access this asset class on behalf of their clients by investing in the underlying, they're able to access over 40 different digital assets. So we're not just talking about Bitcoin or Bitcoin and Ether. We're talking about a whole host, an ecosystem. Right. And so that allows you to do things like tax loss harvesting. If you want to customize, as you had mentioned, it's a really good point. The taxable account of a 58-year-old who's looking to retire early has a very different risk profile than a 35-year-old's Roth IRA, right? And you want to invest according to the goals of the person and the risk profile. And with SMAs, you have a much better way of doing that. It's a much better vehicle and enables you to customize it to the needs of each client individually, but still provide the management services at scale. And I guess the last thing that's interesting about this, at least particularly to me, is SMAs offer exposure to the underlying, which means that for bearer assets like crypto, those can be transferred to clients. If a client came to an SMA manager and said, "Hey, I want my Bitcoin, I want my Ethereum, I want whatever asset," they would be able to get a hold of those assets and self-custody them and use them. And
the issue is that there are lots of SMAs. There's nothing particularly new or different about an SMA. They've been around for a really long time, and a lot of advisors really like them because they like the customization elements of it, that they have much greater control over the portfolio. So talk about the Blockchange difference, the fact that this is a digital asset SMA. Talk about how that differs from the routine rank and file SMAs.
Yes, in conventional SMAs and crypto SMAs, you do have a number of similarities. So they're both actively managed, usually according to a particular investment thesis and corresponding strategy. They are sometimes invested in specific equities rather than taking some kind of proxy approach where you're sampling through an index fund or something like that. And oftentimes it's a dedicated expert, right? These are for asset classes usually where an advisor doesn't have a good proxy like just buy the S&P, right? Maybe they want to get more specific. Maybe they want a specialty asset class. Maybe they want something where there's a knowledge gap between them as the advisor and the asset manager, who really, this is all they do. This is all they specialize in. And in that sense, they're very similar. But where they differ, I think there's a couple key points here. First is this is fundamentally different infrastructure. So it's not going to be like over at Schwab where you could say, okay, I'm going to turn on this manager for this account, and they're going to have control over and discretion to trade the account, and I'm just going to kind of view what's going on and have the discussions with my client. That doesn't exist today for digital assets. So there is this sort of bifurcation of systems a little bit in that you do need to use the conventional infrastructure for conventional investments. And then for digital assets, if you want to invest in the underlying and get that active management through an SMA, you're going to need to use purpose-built infrastructure. And that's what we provide. And I guess lastly, crypto SMAs don't typically have the same high minimums that conventional investments do, conventional SMAs. And that's because there's this ethos in the industry of, well, let's get people off zero. Let's get them invested. Let's get them moving. You can always iterate. You can always expand. It doesn't have to start with a basket of DeFi assets. But having these high minimums is something that I believe is probably going to come much later. And so today it's pretty open, this ecosystem.
So let me play devil's advocate and just ask you this: why bother with a digital asset SMA? I mean, why not just put clients into one of the OTC trusts, such as offered by Osprey, who was here earlier today, or one of the new Bitcoin futures ETFs? Why bother with a digital asset SMA?
Yeah, so those other products, they could be suitable investments for many different clients. Not knocking them, they could be good options. But there are a few reasons that you might want to invest in an SMA vehicle rather than a trust or a closed-end fund or anything like that. So first is the risk of fluctuating discounts and premiums. So you're already paying the management fee or the expense ratio on the fund, right, which tend to be fairly high already, whether they're 200 basis points, 250. I believe Osprey's down at 49 basis points, so a little bit more affordable than some of the other options. But you're already paying the management fee, and along comes this secondary market activity that during periods of boom or bust, you could see a significant premium or a significant discount depending on how many people are trying to buy those shares, because the shares aren't tied to the value of the underlying assets that are held by the trust. You could really get kind of destroyed if it swings the other way, where you get hit double, right? It can work in your favor too, and so that's why it's interesting to some other types of organizations that are riding those waves. But if you're looking for a pure play into digital assets, those discounts and premiums represent a risk that you can't really account for as a fiduciary. Now, the other aspect of it is most of those trusts and closed-end funds, and even private funds, a lot of them, they're not very diverse, right? We're an emerging ecosystem right now. So Bitcoin is the leader, but think back 8 months ago, like very few organizations had Bitcoin. Now they have Bitcoin and Ether, and they're starting to expand into DeFi. Fast forward 6 months, I think we're going to see a lot more of that playing out, a lot more organizations buying a diverse set of digital assets. And so the alpha right now is in the diversity, not just Bitcoin, not just Ethereum. You've got this whole ecosystem, and that's a big deal when it comes to SMAs, that you can find where the value is locked away. The future value particularly is locked away. And you're able to then customize and actively manage those client portfolios, whether you're rebalancing on a quarterly basis or a yearly basis. It's up to you or to whatever asset manager within the network you pick. And it also lays the foundation for lending and staking. So right now, none of those funds are offering lending and staking services baked into the offering. Not to say that they couldn't ever do it, but with SMAs, you might find that one client is more suitable for lending or staking than another. So it's not a one size fits all, but if you have the infrastructure in place to turn that spigot on when the time comes, that's going to be highly value add. I mean, it's way more lucrative than the fixed income that we see in money markets today.
Talk about the Bitria product, the platform that you have, and then I want to ask you about a couple of specific use cases.
Mm-hmm. Sure. Yeah, so the Bitria platform is basically our core product. So the name of the company is Blockchange. The name of the platform is Bitria or Bitria, if you're feeling spicy. But basically, it's a one technology that engages both advisors and asset managers, enables them to scale their managed accounts or separately managed accounts efforts by creating model strategies that they can deploy dynamically across their client base. They can onboard clients, as the clients are ready. So they can start with just a client or two clients that want Bitcoin and start off really simple, and they can get as sophisticated as a model of models approach where they have a DeFi basket that's 30% of a portfolio, and the flagship of Bitcoin and Ethereum that's the other 70%. So it's a toolkit that should be very familiar to advisors. That's similar to what you would see with the likes of Orion or InvestNet or other platforms, but it is focused primarily on separately managed accounts technology.
And in fact, that's a question that one of our advisors in the audience asked. Do you do a data feed to Orion, InvestNet, and others?
Yeah, so we've got some big news coming here soon about integration that we have in data feeds into all of the major portfolio accounting systems. So advisors and asset managers and their clients can see all of the data in a single pane of glass, in their normal workflow that they have today.
So let's talk about two use cases, Dan. One, directly managing client accounts. Talk about Blockchange's role there.
Yes, I mean, this option does make sense for advisors that already have investment thesis in digital assets, and there's quite a few of them. A surprising number of advisors really know what they're doing. They know their way around this asset class. I wouldn't say a majority, obviously, but there's a lot of firms that are living on the edge a little bit, and they're willing to take the risk. And in that sense, if they have the resources to scale these efforts, and they have the knowledge, the know-how to do the fundamental analysis and understand the investments well enough to put their clients into these various assets, and they want the control, it's a great option. So they have complete control over the management of those accounts, and they can do as they like, whether it's a simple investment or more sophisticated. But that's kind of, that's only one pillar of what we do. And in fact, it's not even the core pillar of what we do.
Another key element, which I think is really cool that a lot of advisors would be interested in, is the fact that they can launch their own SMA products with other investment advisors, offering it to others, but doing it through the Blockchange platform.
Absolutely. Yeah. So that really is the core of our business. So you think about the knowledge that exists in this space is important to capture. It's evolving very quickly. There's a lot of different ways to specialize. And in that sense, without the proper technology, that knowledge will not be put to work. It won't realize any value for those that have that knowledge. And for that reason, we develop technologies or a single technology that enables RIAs that have knowledge in the space to kind of trial on their own clients, go through this process, understand how it works, and then we've had a number of firms that kind of went through that process, and then they decided to launch their own digital asset arm that's specialized in digital assets, totally dedicated to digital assets. And that's enabled us to kind of create an ecosystem of diverse approaches that, say you're an RIA that doesn't want to manage on behalf of your clients and you want to outsource it, you can outsource to any one of the managers in our network. And those managers, they have a lot of different investment theses. I'm sure we'll get into that a little bit here, but it offers a very convenient avenue for you to outsource quickly and easily do your diligence across a number of different managers. And then for the RAs and the managers themselves that want to scale those knowledge products, it's very convenient and easily packaged way to do that.
So we've got only a couple of minutes left, but do talk about some of those partners, some of those advisors that have created SMAs within your platform and how they differ.
So we do have a number of them, so probably easier than me sharing each one individually. I'll wrap this up by directing folks to the page that we have that outlines each of them, a little summary on each. But one thing I do want to say about that is that while we have 9 today and we're expecting a couple more to launch here over the next couple months, their investment theses couldn't be more different than one another in a number of cases. And so we've seen asset managers that specialize in kind of the flagship or the classic like Bitcoin, Ethereum, and they've got the get off zero thesis, and that's what they're out there kind of cheerleading. And then you also have those that specialize in DeFi. They're really going and doing the research and understanding what's going on in that ecosystem, because that's where a lot of value is locked up right now, especially for the advisor segment, because it's very difficult for advisors to participate in that directly. And then we even have some organizations that are working on other theses, and one of them is ESG. What role Bitcoin and other digital assets in blockchain at large plays for the ESG world, and how that can be incorporated in ESG portfolios, because there's a lot of thematic investing going on today in that segment. And so this asset class has a lot going on. I think there's something out there for everyone.
So this is an opportunity for advisors to build their own SMA for their own clients, and then if they feel like it, make it available to other advisors and create a whole new chain of AUM collection. So it's a unique positioning in the marketplace. Dan, thanks so much for joining us on the program. For folks who want to learn more about what you're doing at Blockchange, they would reach you where?
You can go to blockchange.ai and just click the SMA network tab on the top for more info on our SMA network, or feel free to reach out at marketing@blockchange.ai.
Sounds great. That's Dan Eyre, the CEO of Blockchange. Coming up next, using dollar cost averaging, HODL, which is hold for dear life, and rebalancing with digital assets. All that's in our next session. So I'll see you in the next Zoom room. See you there. Thanks, Dan.